So today's call request was mainly to help you guys identifying properly which pair you should trade when you start your day. Okay. It's really important that this call maybe will a little bit more focus on people trading New York, as you guys understand, because I don't trade London. So it's going to be hard for me to actually give you advices based on something I don't know. Um, and this is important to understand because since I wake up and most of the day intention is already done, it's hard for me to actually tell you what I would do, but I can tell you what I do before I go to bed. And also in the morning when you guys see me analyze those pairs, you can actually know exactly how I do it. Okay. So it's really important for you guys to understand that price actually gives you always a story. Okay. So as you guys know, I wake up at 7 a.m. So 7 a.m. is around this time. Okay. So when I wake up in the morning, this is what happens when I get on the charts. So obviously I wake up at 7, so I don't get into the computer like 25 seconds after I wake up. It always takes couple of minutes. So is he speaking? Okay, perfect. So when I arrive to the charts, what I have to do is scan each pairs to know exactly which uh, liquidity is more relevant to be taken quicker. Okay, so let me just explain exactly what I'm saying. So in this case, we see that we have clear coming out of Asia. Like your goal is always to identify the intentions coming out of Asia. We can see intentions are pretty clear, right? They're selling. Okay. Then what happens? Price pushes higher, right? Fakes also those equal highs. But what does also this indicates is that we had here, as you see, this point led to this high. We have what we call a change of character. If this is a change of character in our terms is a false break of structure. Another thing that you need to identify when you see a false break of structure, you want to see those intentions, fast candles, engulfing candles. And you can clearly see in this case, right, they do two things at the same time. They induce sellers, right? They induce breakout traders to go short, as you can clearly see this liquidity here, right? And a lot of people I think they overcomplicate stuff like this and this is like what? One pip different. So if you would take a buy here, just focus on taking this liquidity. Don't try to hold until there. So this is another subject, but it's just that it doesn't matter if it's here, it's here. Intentions wise, we have liquidity coming out of this point to go to this point, clearly. But also, if you can see, price goes higher and then makes a new low. And this is where people actually gets also confused about false breaker structure. You need to see those intentions. Because if you go and you try to think like a robot and thinking that the first structural break like this, let's say this, is the false breaker structure. You are actually technically right. But the problem is, what does this entices people to do, right? Basically, we have this SMT, but then you have also this overall leg that breaks this point. So, and this is where when you're trading live, that you need to adjust. Example, you see this first structural break. Imagine this doesn't happen. This is a valid break of structure. But then you see price reacting to this SMT, and then you see this, and you see that this point is really more relevant here, right? This zone becomes even more relevant in terms of these intentions. We have the speed of the candle, we have actually momentum, and this point is way more important than this one because of that leg, right? If you want, you can actually label both of them as SMT, but the most relevant one, the most where people would be looking for is this one. And this is again based on my personal experience, based on the things that works for me. And this is why you see me sometimes do these things, and I do this, and I do this, and I say trap zone, right? Because it's a zone, right? These guys see this as supply and demands, and they usually take a whole zone. They don't just like take a POI, and this is what they do. They see like a consolidation, or like I think the retail term is like accumulation, distribution, or whatever the shit name is. But this is what they see. So this for you, intentions wise, you know exactly that this is a potential trap zone. What does also entices people to short from there, because we have clear equal highs, right? So now we have a structural break to the downside. We have potential breakout traders entry, right? We also have equal highs breaking or pushing price lower. So now we have a kind of inner playing, like in our hands, we have a couple of cards. We have the breakouts, the traps, SMT potentially that is expected. We have the false breaker structure, and we have also the breakout. So there's a lot of intentions saying that we're going short. So when I see this in the morning, let's say I would be trading in London, I see this, I wake up and I just see this. I'm like, okay, cool. So this is a potential, and we always check to the left. This is a potential buy opportunity, right? I'm not saying that you will have a trade, but the important thing is to understand where the market will be dragged to. And this is exactly the exercise I did today on Masters Technical. At the moment of your education right now, you should understand and know exactly that this is potentially going higher, right? Now, each time that we have a structural inducement, our goal is to look to the left on what is it reacting to. Completely nothing, it's okay. Okay. So now we play price. Price just goes lower again. We're not looking into entries right now. We're just looking at intentions. Now you can see here exactly what I say about a trap zone, right? The demand is reacting. Now, at this point in time, you can also see that we have people coming in here, right? So this also entices that we have liquidity to the downside also, right? This is simple stuff. Now we have a solidification of those equal highs. Equal highs, new low, entices them to enter, comes back, retests this zone. God damn it, this is about to be a lottery ticket. So they expect more downside. And as you can see, price just fakes this reaction, comes back, also entices more buyers in, right? Pretty straightforward. I'm not going to identify every single retail strategies because at this point you guys are all professionals. Like I heard you wanted to do the challenge. So let's say if you're all professional, I don't have to market anything. So let's push. And now we have the liquidity grab. And based on this candle closure, we can see that the reaction, the release of this liquidity is obvious. And this is where you actually see that a liquidity trading cannot be faked, because these are actually things that can be justified. And it's not because we have a kind of a fancy candle doji, and that's it. This is clear. We have intentions, we have liquidity, and we have the reaction of this liquidity proving this point, right? Cool. So now that this is done, we can see that what is price doing also now. Remember, we also had buy side liquidity continue to be built, maybe a start of a trend line, but nothing fancy, right? Now we have new breakouts here. We have here. Now let's see what price does. Again, we just play the price. And this is what you should do with your eyes. Imagine that you wake up in the morning and you see this. You should be able to see with your eyes that Asia high has been induced. Relevant liquidity has been induced. Why? Because we have a structural low. You can even identify this as being a fake reaction to go lower and go higher. Then now you know that the actual trade away opportunity is this, right? And the last trade away opportunity was this one. But this one was to trade into the liquidity, because this point hasn't taken sweet nothing, right? But you know that we have all this sell side liquidity, all the sellers are in, and we trade into. This is what I don't want you guys to do right now, because this is a little bit too advanced. I don't want you guys to trade into the liquidity. Maybe when you get a little bit more advanced, what I want you to do is trade away, right? And as you can see, we have liquidity. Now our goal is to do what? Look to the left. What's on the left? What's on the left? Do we have something? No, we don't have nothing. So we will focus on intraday perspective. If intraday perspective is at play, again, you can see the obvious. We're going to go on F1, pretty straightforward. Like a blind person could see this. Here we go. People want to talk about entries. We'll dip a little bit in entries, right? Pretty straightforward, right? Boom, boom. Not SMT. Oops, PY. Sorry. Pretty straightforward, right? Look at how tight this is, right? Here we go. Even better. That's how I like it. Perfect. Here we go. So you see the idea. It's not about an inducement and take an entry. Is understanding where is the remaining liquidity at this point in time. If we both go back into this in the intraday play, there's nothing to the left. Liquidity here has been grabbed. Now what do we have? We have these guys buying. Buy side liquidity being built, right? Pretty straightforward. Order flow being respected. At this point in time, all we have is buyers, and this is where you want to do a little meter in your head, and like you have the buy, oops, and you have the sells, and you need to know exactly where this arrow points, right? And this is important at this point in time. You don't hesitate. And again, to come back to the pair selection of the day, look, just use this little eye here, remove it. At this point in time, you wake up. Let's say you wake up at this time, you see this. You should know for a fact that potentially, if you look to the left, price at this point will provide a good reaction. I'm not saying, and this is a lot of the questions I receive, people are saying, oh yeah, but sometimes we have a false breaker structure and price just leaves and go higher the complete day. We're not talking about why it's going short or why it's going higher. We're not there yet. Our goal is to understand that right now, it's completely logic that price provides a reaction. And as you guys saw in the Masters Technical, this is exactly the way I treat. I am like a detective. My goal is to identify evidences of my analysis, right? I'm just stating the fact of what the price is actually telling me, right? And this is where it's really important, right? You cannot subjectively think that price will do something and expect it's going to be doing it every single time. Now we see the reaction takes this liquidity. Again, we cannot fake this. You can see the release of those candles. We understand that here there is liquidity. This is something I do on a daily basis. Candle formation, candle reaction. I'm not saying chart patterns, but to justify that at this point in time, there's a release in liquidity, it's more obvious that they take liquidity than they enter, right? At this point here, we have an engulfing, so there's no doubts. So in this point in time, there is people entering here, maybe, but for me, I think it's a little bit more obvious that people are entering here actually, because we have that in engulfing, right? So it would add evidences again that we have, that we have liquidity here, okay? So now this is taken. I'm really zoomed in, but this is really important. I see some of you guys trade like this. Like, how can you see charts, candles formation, and some people send me this, can you correct my chart? Like, my eyes are way too old to be able to see this. You need to zoom this crap like literally all your day. You need to see it. You want to see the whole day. We're intraday traders. We want to see exactly what the price provides daily, right? Let's continue. All right. Price pushing up. What's happening here, right? What is happening here? Can somebody know exactly, right? We have that reaction, right? If can you allow me 30 seconds? I need to mute Discord because people are actually spamming the heck out of me. If you don't mind. I'm muting all my Discord. Okay, perfect. Now, what do we have? We have this inducement here, right? But also we confirmed liquidity. But also, we're trading away this inducement. But what is also this inducement? It's what we called I'm going to remove this one so we already know what it is. This is called a retail breakup structure. This is where people cannot be confused, because a retail breakup structure and FBOSS is two different things. We are respecting an order flow, a buy side order flow. So they see this. Remember, those retailers, they see everything as a breakup structure, right? They see this as a retail breakup structure. There is no changes in character on a higher time frame play and in an order flow. Remember, they see biases as being short or buy, sell, whatever they call it. So this is a retail breakup structure. What a retail breakup structure means is they see this as a valid structural point to go higher, but this is also an inducement. I don't want to go into too much details about this because this will confuse you guys. And I think I have about 10 other videos about false breakup structures and retail FBOSS. All this, we will talk about it. So it's just me being excited. So again, justification of that SMT. Why is it valid to be an SMT? First, we have sell liquidity being built. Okay. We're trading away from this relevant liquidity taken. We have also an imbalance POI, but we also, the most important thing, we have liquidity below. Price comes into this liquidity, this POI provides a fast reaction, provides a good engulfing candle. And immediately after, this is why it's important to go into candle reaction. When there's a reaction in here, you wait until that candle closure. And I don't know if you guys know exactly how candles works, but this candle actually opened here, went until here, and then closed here, as you can see with this wick, right? This is basic baby pip stuff. If you don't know how a candle closes or how a candle opens, I suggest you to look at this very seriously because this is important, okay? Same here. This candle closed, this candle here went higher and then completely closed. There's no wick, okay? Now look at the next candle. The candle opens and in a complete 5 minutes, it goes until here. Speed, momentum. God damn it, what is this? Speed, momentum without any wicks, without any slowing down. So we're right. What do we also have? Same thing. We said that we potentially have breakout traders entering here. Not super highly confirmed, but this zone can be stretched to here because they see this as breakout zone also. So this is where we mark up this thing here, right? Let's continue. Here we go. Second candle, same thing. Look at the speed, look at the momentum. The candle went here and completely closed. And this is why it's important for you guys. When you jump into a POI, I see a lot of people do this, right? They wait until the candle closes immediately into that POI and they just take the buy. And then the price does this and they accept this loss. This is actually catching a falling knife. And this is not what we do, right? So now we have our SMT confirmation. Look at the candle closure. Look how it closed. Look perfectly. Okay. Really, really perfectly. Now we can confirm that this SL is done, right? Now, again, coming back to the whole idea of the call, I wake up in the morning and I see this. This is what happened. Like, I literally saw the price like this. I saw this. Okay. Now your goal is to see, okay, what's on the left? We have kind of mini structures, nothing relevant. In an intraday play, we have this. We have taken liquidity here to reverse and take this liquidity, but here, for me, there's nothing really obvious, but what's more important is look to the left, right? What do we have to the left? Let's justify. We have this Asia high, but we have also this little thing. Let's just, and again, we go into the justification. We check, is there a reaction for us here? Okay. Okay. So we are in a kind of a decisional zone. So now again, we justify and we try to find what's the most relevant thing. For me, this is not really really good. So to be honest, this is not something I would mark, because for me, this POI, yes, it made a new low, took out liquidity, so it's a valid decisional zone. Uh, but for me to trade from it, no. So we don't mark it. Again, we don't know. So now we continue. Price pushes lower. Now we have even more. And again, remember when I said this morning, we have these break and retest traders here because they broke here. They retested this zone. And if you guys are confused, I can even put two zones so you guys don't get confused. These are two different zones. Okay. So this is where they enter. This is where they short, right? Breakout, retest, pushing. Okay. And now this point, this line here actually uses the same structure than this one. Yes or no? This is where you need to confirm in the chat. Does this structure stop loss uses the same? I'll repeat myself. Does this point and this break and retest trader uses the same structure? Yes or no? Everybody that said yes are wrong. Because look, this is, again, we go with the PAT tool using the structural legs. Let's put this in red. So this point is the one that led to the new low, right? So this adds even more importance of this stop loss. So what we can do, let's make it bigger. It's more important, right? And now, and remember, this is the overall push now. And now this is where things get tricky. This is where people get confused. We have this push higher, right? What happens here? Tell me in the chat. What happens here? Here. F boss. Yeah, give it to me. F boss. Right? So we have that internal F boss for the little play here, but we have also this higher time frame order flow being broken. So this, when I wake up in the morning, literally, this is how simple the whole strategy is. I wake up in the morning, I see the liquidity here taken. I see this pushing lower. I see this. I see nothing to the left, right? I see this crap. So I expect this being a change of character and this becoming a trap zone, right? Easy, easy, easy. And then what happens? We trade into the liquidity display, and display is exactly the same thing. And look, we wait for a little break of structure, right? Break of structure. Why this is a relevant break of structure? It's simple. This point led to this new low. So this one provides a relevant break of structure, and you mark up your POI and you just go target the liquidity. At this point now, there's no more liquidity, but we're building new one, right? Pushing higher, new liquidity here. This one is taken. This one. And this is also where people get confused. This liquidity is far more relevant than these small ones here, because we're attracted to this point because the people that trade higher time frame, if you want to go in up in time frame, right? Look, the change in character is everywhere. But I'm telling you, you don't need to go in a higher time frame. Just focus on this. Look, it's always the same thing. The order flow is higher, right? Order flow respecting switch magic. So this is why we took this trade. Target the highs. all the liquidity is taken. And I think that this is the live chart. And look how price is being choked, because right now it's late, it's Friday, there's nothing to build, and we're happy, right? But when you wake up, you need to scan all this price action and be able to actually identify which one are good or bad. And this is a perfect example of a perfect day. Now let's look how to identify a wrong day. Okay, let's go. Let's go on GBP, GBY. I didn't even check GJ today. Perfect. This is a great example. Okay. So when you wake up, let's say I wake up at 7. Okay. I wake up at 7, whatever, 7 a.m. I'm gonna be honest, I don't always wake up at 7 a.m. right now because I'm pretty tired. But it's okay. So basically I see this, and this is something that will be launching in today's video. When price is overextended like this, when should you be looking at buys? Because it's really important. It's okay, they will one day build liquidity to one side completely, but again, you need to do the same exercise. You need to do exactly the same thing. Where is the liquidity? Right? You can confirm with your own eyes. You see it here. You see a little trend line, right? Price takes this. This does what? Right? What is this called? An FBOS. If this is an FBOS, this is an SMT. What entices this to be an SMT? It's also at Asia low. If it's at Asia low, there's potential liquidity, right? Now we have more buy side liquidity being built here, right? We can see it here, liquidity here for this structure, new break, this candle here. I don't like it because it didn't close above. I don't like it, but there's also liquidity here under the SMT, right? So this is a potential trade. I don't think there is any opportunity here. No, nothing. I think it's a little bit too pulled by hair. Nothing. We just target the liquidity, but it's rinse and repeat. They push price lower like this. Look, the engulfing, we don't hesitate. They come back, they retest all this crap, retest here, boom, boom, boom. Same thing. Now, what happens is we are what we call in an overextended phase. For me, when price pushes in one direction, the last thing, I repeat, the last thing you want to do is to look to buy. Okay. When you see price pushing at this point in time, what do we do when we have this kind of inducement here? When we have this, what do we do? Tell me in the chat. Look left. Thank you. Look left. What's on the left? Let's check. Okay. We have this. Okay. Not too much, right? But what do we have? Nothing. We have this little point here. Okay. We kind of took this. What does this do? Make this high, right? Okay, so if people entered here, they're break even here. So what's the only relevant point to look for? It's this. Why? What this did made a new high, right? Simple. So when you wake up in the morning and you see this, first reaction should be, let's look to the left, right? You can take shorts. If you want, you can take shorts. But if you're looking to buy, you look to the left. There's nothing. What's this? I see some people marking this on their charts. We're not like, I don't know the name, what's that guy online? ICT that literally, the people that trade ICT that literally take random POIs to the left to look fancy. That's not providing any liquidity. That's not providing anything. We're not here to literally ask a small PO. It's like if you were asking a little rock to stop your car on the highway. There's literally nothing. This is complete bullshit. There's nothing. Nothing. No liquidity, no trading. What do you do now? When you wake in the morning, you see this. If you miss this short because there's no shorts, you see this, there's nothing. What is the only thing you should do at this point? Tell me in the chat again. Wait, what? How can you wait? How can you wait? What is the action? There's something you can do on the chart to wait for this point. Set an alarm. Thank you. So you go here, you set an alarm. Let's play price because I'm not able to set an alarm until this point, until price plays. Here we go, here we go. And now you come here, you set an alert, and you go here, you edit, GJ relevant. Is this a daily low? Yeah, previous daily low. Liquidity, that's it. And when you have an alert, you drag your attentions to the chart and you know exactly when to take a trade. And now this is really important to you guys to understand. It will happen, and it will happen multiple times that you have, example, you have liquidity here. It's building little internal liquidity, pushing price lower, going into a POI, reacting to this POI, providing what we call a pullback trade, and you will learn how to do those. It's okay. It will potentially even target this point here. It's really possible. But this is not something you should do today. This is not something you should focus on, because what happened if you wanted to do this ninja move and buy from this decisional POI, right? A lot of people would see this reaction, enter here, hit a stop loss. Then price will go here, they would enter here also, hit a stop loss. Then price goes here. Now, this is like literally gambling, and this is not what you should do. There is 9 different pairs that I provided for you guys. When you wake up in the morning and you see the price overextended like this, first thing you should do, look to the left. If there's nothing to the left, you don't touch at this pair for the whole day. You set an alarm, you go on another pair. Now let's go on Euro USD, right? Go on Euro USD. When you wake up in the morning, let's say I wake up here, look what's happening, right? You see this, you see price doing this FBOSS here, valid FBOSS, right? Now, there's an SMT zone also. If there's an SMT zone, what does it mean? We're trading into the liquidity. So if we trade into the liquidity, potentially there's an entry here. We don't know. That's not our goal. Our goal is to actually know exactly when to trade away from. And now we have that SMT zone here being taken. Now, what do we do here when price induces this high here? Tell me in the chat, please. What do we do here? What do we do? What do we do? We look to the left. What's on the left? Again, okay, right. There's this point here. And as we saw earlier, there's this imbalance here that it reacted perfectly, if I remember. But again, this is insignificant. It's not important because it's not taking liquidity. I think it's a little bit lower. I don't remember where it was. No, it was the whole POI, I think I marked. I did this today and I still don't remember. God damn it. Okay. I don't remember. It doesn't matter. So as you can see, the liquidity is taken. But again, this is, again, always rinse and repeat. You wake up in the morning. If you wake up in the morning and you see this, you know exactly that this pair will look good, either if it's short or it buys, because it's not overextended. Let's go into another pair, EG. Look, do you want to, if you wake up in the morning and you see this inducement, look to the left. Okay, so now let's put an alert here. Again, it's always the same thing. Put an alert here. Let's stop the price and see where it goes, right? Hasn't touched the zone. You don't touch the pair. And I think this is the reason why I'm not a fan of people trying to trade and master one single pair. There's no such thing as knowing a pair, knowing how a pair reacts, knowing how they all work the same way. The only thing that changes is the pip count. So let's say in gold, the pip count is higher than, let's say, in EU. So of course, you cannot use the same lot size, right? So same for GU. And EU, if you look at the candles, GU provides more pips than EU. But since we trade risk to reward, we don't care about anything related to the pip counts. So this is in hindsight what I do in the morning. I just look at the pairs and I know immediately which one is good by looking to the left and quickly seeing the intraday play. So let's say CHF, I didn't look at it today. I don't want to trade this shit. No. ADUSD. Ah, this looks good, right? This looks good, right? The moves, the legs, it looks good. You want to have big moves. You want to have clear intentions, right? Boom, boom. We know exactly for a fact. Look, pushes lower. Where does it go? Our break even. These guys, look at their reaction. Look, if you go on a higher time frame, I don't need it, but look, it's also a break and retest zone. The guys that entered here, that has a stop loss here, push here, they move eventually to break even. Look, they enter here, right? They target the moon, whatever the moon is, right? Comes back. Do you really think that after this amount of days, one day they will now move to break even, or move your stop loss and profit? Take your 1, 2, 3, and that's it. Look how break evens are important. Look, close this. You don't need a high time frame. Look at this. Boom, boom. You know, look at the candle closure. Does it provide an entry? The answer is no. Does it make sense? And did we trade it away from this liquidity? Yes. And this is where it's important to understand the price doesn't always provide an entry. Like when Jay Call posed those value trades of the day, these are the best scenarios, but the liquidity gives you the direction, because you can be good, right about the direction, but be wrong about a trade. And this is why I don't want you guys to focus on entries, because you need to build experience on um, liquidity. So someone said there's liquidity, that there's an entry on M1, but that's like a little bit too pulled by the hair. With the price being overextended, this is something I would never take, right? Because how can you know that this point will not do lower? This is a little bit too pulled by the hair. But this is actually what I wanted to talk about. You need to jump into the charts in the morning and look at which pair will provide intraday plays based on our actual Asia session template. And as you guys know, today we're launching our new indicator, right? It will be available by the end of the day. And also, I did a video about it. So right now I'm going to be stopping the call, the recording, and we'll go into entry. So please allow me 20 seconds.